Hello and welcome to Switzer TV. This is our look at what the Treasurer said about the economy going forward and the support measures they're going to be offering. I'll look at Josh Frydenberg's economic update to see what impact it might have not only on the economy but more importantly to us, the stock market. Paul.
We'd have to say, Peter, the forecast he's given us is pretty positive. I would think better than maybe the market was expecting.
Yep.
Let's just hit the top numbers. The deficit for last financial year just completed, blowing out to $85.8 billion. Next year he's talking about a deficit. This is the year we're currently in, just started, $184.5 billion. If you're worried about debt, that takes our gross debt out to $852 billion, and net debt as a percentage of GDP blows out to 35.7%.
Yeah, can I just throw something in here as well, Paul? That gross debt is about 50% of GDP. America's well over 100% of GDP, so we're not in a bad position even on a gross.
Yeah, and look, really, I guess you shouldn't get too worried about that, but still, it's a big increase in numbers. Probably the numbers that are probably most surprising is a GDP forecast. He is only expecting a contraction this year of 2.5%, and that's probably a little bit lower than many people have been forecasting. Year on year, financially, or for the calendar year 2020, a contraction of just 3.75%. Followed by a bounce back in the 21 calendar year of 2.5%. That's a lot lower than the IMF and others have been forecasting. Unemployment is expected to peak at around 9.25% in the December quarter this year. Yep. Also, some other assumptions that have come into those numbers, Peter, just worth sort of hashing out in some ways, because you might say these are a little bit optimistic as well. Victoria only facing a 6-week lockdown now. Yep. Some of the data suggests that maybe we're 3 weeks in, that might extend a bit further.
If those numbers are longer, the other numbers will not be as optimistic. They will have to be tweaked without a doubt.
Treasury suggesting that international travel will return from 1 January. That doesn't mean we're all going to be suddenly on planes, but at least borders will be reopened to some extent.
Students might be allowed in, 2-week quarantines.
And they didn't talk about a vaccine and dates there, but clearly, the government's still banking to some extent on the development of a vaccine and that becoming available. Otherwise, you'd be looking at a much worse set of numbers for next year.
Without a doubt, Wall Street's optimism, which is carried over to all markets around the world, is linked to the fact that they believe there will be a vaccine before the end of the year. And the top medico in the USA, Dr. Anthony Fauci, said exactly that only a week ago.
Now, the impact of what the government is doing, they're throwing so much money at the problem, Peter. It's just worthwhile highlighting these two graphs. The dark line shows after the government support, the lighter blue line shows before the government support. So you can see the impact of the government support is higher GDP and a much lower rate of unemployment.
Yep, and those numbers are a reflection of how much money has been thrown at the problem. And quite wisely, the extension of Jobkeeper partly explains why those lines look good as well.
Let's move on to Jobkeeper and Jobseeker. So let's look at the key changes that were announced a couple of days ago. Yep. The full-time rate goes from $1,500 down to effectively $1,000 in the third period in January to March 2021. Now a 2-tier system, so there'll be a difference between full-time versus part-time. The employer test is the same, but the period's extended, so employers will need to demonstrate that for the next round of Jobkeeper in October, that their turnover was down 30% in each of the June and September quarters. For bigger businesses of over $1 billion, that's 50%. And when it comes to the third period, they'll need to demonstrate that turnover was down by at least 30% in June, September and the December quarters. The number of employees to be covered goes from $3.5 million to $1.4 million in the second, 1.4 million in the second period and 1 million in the third period. That's obviously implying that employment is picking up, hence the peaking in unemployment in December. And for those on the Jobseeker, it gets cut by effectively $300 a fortnight, so down from $810 down to $810 for at least the period up to the 31st of December. But it's not the only stimulus measures. There's 3 others that are just worth highlighting. There's a loan scheme for small and medium-sized businesses that's been extended to the 30th of June. 2021.
Yeah, and that's where the government basically will put 50% in and back a loan up to the tune of $1 million. And it was only for working capital. Now it's for any investment or expansion reason.
Yep, there's a lot of training packages. We've got a job trainer skills packages to help new people get started in doing tertiary courses and some TAFE courses. There's also a supporting apprentices wage subsidy. That's been extended for another 6 months, plus expanded to medium-sized businesses. So we expect a lot of younger people to taking up apprenticeship offers. And finally, perhaps the one that was a little bit of a surprise was the early release of super. That was due to expire on the 24th of September. That's been rolled out now to the 31st of December.
So Paul, when you put it all together, certainly the last one could have a bit of an impact on the stock market in a negative way, but to my way of thinking, if I'm trying to work out where my company's going over the next 6 months, and I look at the government's forecasted figures, I might be more optimistic on my company, and that should affect my share price.
Yeah, to answer the question we posed, will it keep the stock market rolling? I think overall you've got to say the package and what the government is doing is pretty positive for the stock market. Sure, some of the assumptions might be a little bit
Robbery?
Well, maybe say courageous, optimistic, but they are throwing the kitchen sink, and they're going to continue to throw the kitchen sink at the problem. So that's got to be good for employment in the long term. It's also got to be help, the stock market in the medium to short term as well. I guess the challenge is how do we ever repay the debt? But that's a problem when interest rates are at 0.25% and staying there. That's probably a problem we don't need to think about too much.
That's right. And if you get economic growth, eventually it will be repaid.